Hey guys, it's Wayne Scully CPA here, bringing you another awesome and informative video. My firm is Scully CPA PC, and we are located in Forest Hills, Queens. We meet clients by appointment only. However, there's no need to make an appointment to visit our website at www.scullycpa.com. At Scully CPA PC, we focus on providing solutions to landlords, flippers, and real estate pros so they can save thousands of dollars. Taxing you is their job, saving you is ours, or we'll give you $100, okay? Today's topic is how to complete Form 9465. It's the form that you use to request an installment agreement. It's part of your tax prep package. If you're preparing your tax return via software, you'll be able to use that, complete that form, and make that request as you submit the return. Without further ado, let me discuss how you kind of move through the form to complete it and request your installment agreement, aka payment plan. So I'm going to bring that up. I did have a client this past season who had that issue, and I just changed his name to protect the innocent so that you can kind of see real numbers based on real situation with this particular client. If you owe something, like, you can use this form if you owe, in this case, you owed $4,530, right? So there's really no need to try to get some sort of other than your straightforward guaranteed installment agreement. If you had a situation where you needed to show financials and you had a pretty nuanced case, you wanted a tiered payment plan, for example, where you would pay a small amount now and maybe balloon it later on, you probably don't want to use this. So if you have a high balance over $10,000, you could use it for an amount more than $10,000, but I'd say over $10,000 and you cannot make the payment as calculated here on line 10, you would want to go to speak to a professional or complete Form 433A or 433F and contact the IRS or contact someone like myself to handle that for you. This form is very limited in what you can do with it, right? The options you have are very limited. In fact, you only have one option pretty much to do this mathematical calculation. The mathematical calculation is to divide 2,000, in this case line 9, which has $2,780 on it, or by 72 months, right? And you get $39 per month is what the client is going to have to pay. And so they wanted to actually make a payment of $250 a month. So that's why we have that here on line 11A. So it's larger than 39, so it's fine. If it was something lower, then it would not process through. It has to be an amount greater than $39, okay? Which is good for the client. They get to save themselves some interest and penalties, because the quicker they can pay off the remaining balance, in this case about 12 months or so to pay that off, the more interest and penalties they'll save themselves. If the amount on line 11 is less than the amount on line 10, and you're able to increase the amount if you're able to increase your payment to an amount that is equal to or greater than the amount on line 10, but because this is greater, 11 is greater than 10, then he's fine. He doesn't need to make any changes to that. If you need to increase your payment on line 11B to more than or equal to the amount shown on line 10, you have to complete Form 433F. This form has limitations. That's why I and other professionals like myself, we do not use this form typically. I did it for a client, this client, because of the simplicity of his particular case, and that's why it made sense. But typically, for most collection cases I will not use this 9465, and I would not advise a taxpayer to use it on their own either, especially if they owe over $10,000. So he wants to make the payments the 15th of the month, so you have to pick a day between the 1st and the 28th of the month, and that's when they're going to start taking payments. He wanted to do $2,000, but we knew taking the first payment on the 15th of April, not using this form. We can select a future date. In this case, the default is the next month, or the whatever date it is that comes first. This was done on the 15th of April, they would start taking the money on the 15th of April. So we didn't want them to take $2,000. That's why we adjusted the amount on line 8 to $1,750, knowing that they would start taking $250 every month thereafter.